YouTube to the Everyday Growth Advisors, a platform where you will learn how to grow as an investor and a trader. My name is Tushal. I am originally from Singapore and I have been a trader for about 6 years. I started with Forex and I have now moved into US equities and other kinds of financial securities. You will need no background in financial knowledge to be a part of this channel or learn on this channel. The aim of this channel was from a lot of interest from my friends telling me to make some videos teaching them how to invest, and I think this idea came about from just the passion of me wanting to teach others what has worked for me as a trader and an investor over the past 6 years. I've successfully grown a portfolio of a decent size from $500 using just simple techniques, and I can't wait to share them with you. So here goes. The Everyday Growth Advisors is also a platform that is partnered with the Option Swing, which is a community of options traders on Discord as our platform. Feel free to look up Option Swing, and shout out to Jason and Jose, who are the owners and founders of them, where I am also part of the team there. So just to kind of give you guys a introduction of the channel, this first video is going to be not much material, but mainly an introduction to everything that we have to offer. I know that there are a lot of channels out there that will be giving you tons of information on financial literacy. But this is going to be one channel that will always remain free and is aimed at helping others grow and improve their financial education in the process. So the major differences between this channel and others is that I honestly created this channel to be a future reference point for my children and next of kin many years down the road. If they need somewhere to go to learn how to invest, this would be the place for them. So we aim to remain free as a repository of information for anybody on the internet, and I think there's a general understanding that people in this current generation don't know much about investments, and I think that's pretty sad, and I want to change that. So this is me reaching out to the world and trying to change something, do something about it. I think there's a general feeling that when you teach somebody how to trade, you lose something out, or you have given away your secret. But I view it actually that's really bizarre to me. And I think that the market is so big that no one can steal any kind of business from you. So don't ever be afraid of that. In fact, dive head in and learn as much as possible, because you starting earlier will make all of the difference. Yes, remember what I just said. Time is a very, very interesting concept, because you and me have a fixed amount of time, and it's very, very precious, as you will see in future videos that I put out. So the other thing is, many channels on YouTube, they are directed at selling you a product or have a freemium component to it, where you can be a free member and the platform gains something from it. I don't believe in such a thing. I think knowledge should be free, and I want to keep it that way as much as possible. If this channel blows up and something happens, I don't see myself trying to monetize aggressively, because I don't think that's what I want to do here. This is meant to be purely educational. So many channels charge you a fee, and this one will be free, so I hope that gives some value. They make you feel like you're a part of some elite team, and I just don't believe that there are elite teams out there. All the elite teams are sitting in banks and sitting in the Federal Reserve. So of course, there are some groups like Option Swing that are worth the money, and I can attest to it because I've been in the group for a while. Lots of experienced traders that are like-minded, like myself, trying to teach each other how to make money through any situation in the market. But it all boils down to two things. As an investor or as a trader, you have to choose your path. And so, without further ado, these are the two paths that you can take in the financial world generally. The first path, being a passive investor, would mean that you put your money down into an investment and you sit over it, disciplined and investing the same amount over a long period of time, such as an index fund, which, by the way, is the best investment for you. So if you are a passive trader and you think that you just want to make an investment and stick with it, you don't want to deal with markets ups and downs, that is truly the best thing you can do as a investment. Then go for a passive investment and invest in a index fund that has a group of large amount of companies together that will essentially give you a diversified return over a long period of time. The average return of the S&P 500 is about 10%, and if you don't know what the S&P 500 is, it is the top 500 large cap companies in the United States of America. The US is a very stable stock market, but it doesn't mean that it's the best. I will discuss in future videos that there are other markets as well that are very attractive in valuation right now, and we will cover those as well. So the best part of a passive investment is that you don't have any stress. You just invest in the same thing every month, every year, and they are extremely low in cost. And this is very, very important because as your investment and money has a compounding nature, the cost also has a compounding nature. So let's say you were investing in a fund like a mutual fund, they would have management fees of about 3%. But if you invest in an index fund, management fees can go as low as 0.07%, which is very, very low compared to 3%. So that's where the major difference lies. And if you don't believe me, it makes a big difference. Look up a bet that Warren Buffett made with a hedge fund trader about 10 years ago. It's needless to say, I'm not going to tell you who won, but it's needless to say who won. Warren said, I'm going to invest in an index fund. And the hedge fund said, all right, you do your thing. I'm going to invest in a basket of my own stuff that I think is going to do well. And you'll be able to see who did what. Just look up the article. It's very, very famous. Of course, there are some disadvantages of passive investments, which is the fact that your variance in the investment could be different. Let's say you got in at a specific time and the market drops, then your return is going to be much less than a person who's been riding that wave for a long time. And also, since the risk is generally lower, your returns would be also lower, because risk and return have a completely proportional relationship. The higher risk you take, the higher return. That's something we all know. So on the other end of the spectrum is where you have active trading, which is a investment strategy where you can build your own portfolio. A portfolio is simply a collection of assets that kind of give you different returns, and you can control your risk tolerance in this fashion. And during periods of downturn, when you are actively investing, you can also generate additional returns because the market, you can make money from the market in both ways, when it's going up and going down. So these strategies, when you're active trading, can generate you additional returns. Of course, there are also tax management strategies when you are active trading. If you sell your losing trades more often than your winning trades, you would have a tax benefit. So we call this process tax loss harvesting, and it's a pretty common thing for investors and traders to do. Of course, there are downfalls of active trading, and one being that if you pick the wrong thing, you're going to lose everything. And it requires time and effort and discipline to manage your risk. And if you don't know how to do it, majority of the people, they lose out in the long run, which is the case in point which I was trying to make with Buffett versus the hedge funds. So you have to choose your style, and right off the bat, it doesn't mean that you can't have both. You could do both as well. Personally, I have two portfolios, one that has a long-term approach that concentrates on dividend investing, and also building a diversified portfolio through indexes. And then I also have an active portfolio that is purely based on options trading, that uses leverage in terms of options trading, because options themselves are a leveraged financial security. It offers you the ability to make unlimited upside in certain cases with a fixed downside. So you can do both as well, but majority of the time you would have to put in a big lump sum in order to get to the passive investments later on in your journey. So I hope that this first intro video kind of gives you a good idea on which path you should take. It's very confusing out there. Where do you start? How do you do this? Does one go about even investing? That's the main question here. And so you have to choose your approach first. Do you have the time? Do you have what it takes to put in the effort and the discipline? And if you choose that path, that gives you a higher return, but it comes with the cost of you losing everything. If you choose the passive investment approach, you would have less returns, but you would have a much more safer investment. So I'll see you guys in video 2 where I will discuss more of this. See ya.